Happy Monday. It's 8 a.m., 8:01 a.m. Chicago time on Monday, the 10th of February, 2020. Thanks for joining me today on episode number 1689. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk-off sentiment dominates money flow. It looks like the laggard today is crude trading at 49.91 on the March contract. By crude, I mean WTI, down 45 cents or 0.89%. The DAX follows down 56 points or 0.41%. The Dow is down 71 points, the Russell 2.9, the S&P 6.25, and the Nasdaq down 14.5 points or 0.15%. The S&P is trading just outside of Friday's range, just below and pushing lower. The low overnight was a lot lower. We've had an interestingly volatile session overnight in terms of just the way the price action has been taking place. The leader today is the cable. The British pound is trading at 129.42 in the futures. The bonds are up 12. The gold is up $3.20, trading at $1,576.60. The Bund is up 27, and the 10-year is up 4.5 ticks. So that's where we stand this morning. A slight edge to sellers as we come in. Um, Overall, in terms of what's on schedule, there was nothing really critical scheduled overnight. Fed's Bowman spoke at about 45 minutes ago, 8:15 Eastern, and we got some numbers. We've got some numbers lined up, but nothing crucial. Consumer inflation expectations at 11 Eastern. U.S. budget plan for fiscal year 2021 at 12:30. Uh, the president's speakers are indicating that he, in fact, it was not touching Medicare or Social Security, although there are reports that he was cutting Medicare and Social Security. But again, election year, it's hard to tell what to believe. Fed's Harker at 3:15, and the Australian NAB business confidence, a key number for Australia, comes out at 7:30 p.m. That's what's on schedule. In terms of what we looked at on Friday, Friday was non-farm payroll day. We had a number that was strong on the headline, weak on the balance, and the overall market sold off a little bit, and it looked like the new high is following the same pattern we've seen, which is to we put in a new high and then we start selling off shortly after. Again, the S&Ps are selling off right now, pushing lower, towards the lows. They're about 14 points away from the overnight lows. The primary scenario is responsive buying up into the 39.75 area, key area there, and then expected a rotation down out of the range to push the 27.50 low and to start squeezing into the 24 and 22.50 area. Here's what actually happened. This is what we saw on Friday. A small response, open auction, a small response, could only get to 34.75, couldn't get up here to the 39.75 area before it rotated down, pushed into 24.25, and then it ended up squeezing all the way up through. This was not really expected. A small double top here. This was not expected that it would push down and then up, but it ended up squeezing to 41 and a quarter, pushing through that 39.75 by about a point and a half, 6 ticks lower high, and then it just broke down in the afternoon, into the afternoon, catching its primary and secondary targets. Remember 2250 was the secondary target, 2350 was the primary. And it managed to do that, pulled back right to mid right here on an impulse. So we finally get a clear impulse down, pulls back to the mid, and then holds steady. We end up with a neutral day, a normal neutral day with a nice excess at the top, and the market settling lower, accepting lower prices. The point of control, which is this maroon line, the point of control moving lower, price action moving lower, lower highs, lower lows, and it looks like it is balancing out. So on a slightly bigger picture here on the 15-minute, we have basically what is a clear top that is being put in, and we have a profile that looks very, very odd. There was a lot of trading near highs here on Thursday, and then we just couldn't push into that area on Friday, just held value low very well, and then pushed lower, and then we finished right on top of the MC point of control here that this day was part of forming, and that's the overnight point of control, the overnight point of control right on top of the MC point of control as well, or Friday's point of control, and we're trading below it. So I'm looking at clear potential resistance here on the push up into 2350 again from below. And it's an easier path lower. And of course, we do have a gap that we left behind on Wednesday that's looking to be filled between 1175 and 05 and a quarter. We're currently trading 18. So that's where we stand currently. Again, this profile is not showing balance; it's showing three prongs, and is showing some discord there in the way the market was trading. What's interesting on Friday was how strong the delta was relative to price, which is pretty much um, which isn't something that we've seen here recently. Generally, the delta's been weak as we've pushed higher prices, as there's less aggressor participation on the buy side. But on Friday, there was a lot of interest in buying, a lot of aggression in buying, even though prices finished lower. You could see the point of control. I mean, the delta is at 8,800, closed at 8,800, even though price was under the open where the delta should be zero. And so that's some I wouldn't call it capitulation, but some signs that there's a divergence going on in that. Looking at the carrying this forward to the overnight session, we opened back up. So we closed right up here on Friday. We opened back up right here. We immediately touch the push through the close, and we spike down on the open, come right back up, consolidate for most of the session. Volume is actually relatively high, approaching 400,000, and overall we have a nice little excess low that we put in. This is a beautiful low here. You can see that volume was falling off as prices were heading lower, and the profile is pretty well shaped with the value area of the overnight session resting above the mid. But there is some discord here. There's, as the market was testing higher prices, it kept putting in lower highs, and it got into this kind of a consolidation pattern that it's breaking to the downside. To me, overall, it looks like we are tired. Buyers are tired temporarily. The non-farm payrolls are behind us, and there's not much on deck in terms of news and so on. And so the market may move under its own power, and if it does, I expect that it's likely to, um, it's likely to push lower. What's going on with Bookmap here? Let's pull that over. These monitors play funny games. So here's the order flow picture. There it is. We open up, push down, and then spike through the high on the open, spike through the high on the open, and then from there put in these lower highs. And now that we've broken through, now we've got this push lower. The liquidity rests below at 3307 through 3305 for now. Not seeing very much liquidity on the upside. Expecting that it's very likely to continue to push lower. Some nice liquidity at that 33.39.75 area up here, 35. These areas have been kind of sticking around pretty much the entire evening. I'm expecting this to continue to test lower and into the liquidity below. Not much to glean from the order flow right now, but overall, it's the Monday after non-farm payroll. Generally, we don't see all that much action, but the volume overnight is indicating that there might be some there might be some repositioning and so on coming into this session. There's a fair amount of activity. So overall, here's what we're looking for in terms of expectations for today. Again, the calendar is relatively clear. This morning, I expect this to continue to trickle down as we open 15 minutes from now. I expect this to continue to push lower. I'm expecting a little bit of a struggle as we continue lower. The squeeze is likely to take a little bit of time. I expect to close the gap, pull back into Tuesday's range, looking for 32, 95, 96, big area down here, 95, 96. The fib pullback of the day session from the last swing low to the all-time high rests at 95 with a point of control at 96. I'm expecting this area to see a reaction if we do get back down here, looking for a bounce and then for it to close somewhere in the middle. That's the primary scenario given how we're behaving currently. The secondary is the traditional responsive buying. We open up, chop, push up, responsive buying into this 22 and then 24 area. 24, 27 is the MC point of control. Expect it to struggle here, come back down, consolidate for the rest of the session. Relatively uneventful. If it starts to push up, I expect that it's likely not to get much volatility at all. We get better opportunity in terms of day trading on the downside downside rather than responsive. Given that we are opening out of range, scenario 3, expectation is to continue to push, test lower, impulse up, consolidate, squeeze into the prior range, hold steady, and then finally break through, consolidate at 27, and then squeeze through that overnight high. And then in that case, we would be targeting that 39 area before it consolidates into the close. The rest of the week, looking at the calendar, we do have some numbers out of Great Britain that are high tier. Not much out of the U.S. tomorrow. There's a Fed's chair Powell testimony at 10 tomorrow. And then on Wednesday, pretty standard stuff. Fed's chair Powell again, the testimony to Congress at 10 a.m. on Wednesday. We have the crude figures, monthly budget. But again, there's really not all that much until Thursday at 8:30 Eastern. We get the inflation rate year on year and the core inflation. And then we wrap it up with Friday, Eurozone GDP and retail sales in the U.S. And then Michigan sentiment. So the week is not all that heavy in terms of in terms of scheduled releases, economic releases. The market will be listening intently to Fed's Chair Powell's testimony tomorrow, more importantly than on Wednesday. But that's about it. Okay. Good luck today. I'll catch you tomorrow morning. Take care.